Oil prices climbing this morning, pairing yesterday's losses as concern that an escalating Middle East conflict could hit supplies. Joining us is Dan Yergin, S&P Global Vice Chairman and author of the book, The New Map, Energy, Climate, and the Clash of Nations. It's always 50-50 supply-demand, I guess, Dan, or sometimes one or the other become more important, and what now is really the lever for controlling prices?
I think right now it is in fact demand. Post all the recession fears, which you've just seen in the general financial markets, and it's quite striking that the oil market so far is not preemptively pricing in the risk of what seems to be a very imminent conflict. Saudi Arabia has just told all of its citizens to leave Lebanon. Iran has told pilots to avoid its airspace. So there's a strong sense that something's going to happen. It's not affecting the oil price yet, and no sense of a disruption of supplies yet.
Did OPEC's mentality change in their plans? Do you think they're going to amend or change any of the things they decided to do, either based on the demand or what happens in the Middle East and the conflict?
Yeah, well, there's, next in October, they're supposed to start raising supply, and they just reiterated that they're supposed to do that. But they said, of course, they completely reserve the right to not do that if market conditions change. And clearly, among all those countries in the Middle East, including the oil producers, there's a terrible fear that of a war that would be bigger than what we've seen so far, involving Hezbollah and Israel and Iran and Israel.
Why did, after October 7th and everything we've seen, and it's been a wide conflict already, not as wide as what we're talking about, obviously, if it's not just Iran proxies, but why wasn't there more of an effect then? Was that offset by weakening demand?
I think it's been demand. I think the market participants have gotten out, accustomed to no longer reacting before something happens. The other thing, Joe, that I think is really important, and maybe we're going to hear about in the presidential campaign, is the shale revolution. The Western Hemisphere now produces more oil than the Middle East, and the number one source, of course, is the United States. And I think that has been a great stabilizer. If we were still importing 60% of our oil, you can be sure that the price would be a lot higher than it is today.
Can you give us an idea of what it says about whether the globe is slowing more than people thought, or even whether the United States is, whether China is, whether Europe is? Can we glean anything from what we're seeing in oil about whether are we on the cusp of a recession in this country?
Well, I think if you look, one of the things we look at carefully is Chinese oil imports, because China's been basically about half the total growth in oil demand over quite a number of years. And we were quite struck that in the first half of this year, Chinese oil demand, the imports were lower than they have been, which is kind of breaks a trend. I think the other thing is, I was just looking at the S&P PMIs, and there is a more mixed picture because it shows manufacturing weak in the U.S., but it shows services strong. So, but as you know, and you've been talking about for the last few days, is that this kind of mentality of fear of recession is there, and that's going to affect commodity prices.
Yeah, psychologically, and it's a self-fulfilling at times, and a virtuous cycle, or whatever it is. All right, Dan, I don't know. It's been kind of boring. Oil normally
Joe, that may be famous last words. So since we seem to be maybe only hours away from something we haven't seen before in the Middle East.
Well, I don't want that. Obviously, none of us want that to happen. But I like 30 to 150. I like that range. And it's crazy. We've seen it. We saw. I want to get paid to take some oil. I've got some some tanks built into my backyard. Remember when you could actually make money? Getting a delivery.
Yeah, during COVID. Some of the discussion that you see now, people forget what that price collapse looked like, and the lasting impact, the caution that that's put